Hi guys, did you know that whether you're trading US stocks, crypto, Forex, or even Nigerian stocks on the NGX, the charts all speak the same language. They all follow the exact same principles. But here's the problem. Most traders, especially beginners, don't know how to read that language. And that's why they keep entering trades too late, selling too early, or losing money completely. The money, they say, is in the charts. And once you understand this one skill, you can analyze any market in the world. So in this video, I'll show you how I learned to read trading charts step by step. I'll also show you how to apply it to Nigerian stocks and global markets. And later, I'll reveal a simple trick most Nigerian traders ignore that can instantly improve your entries. Plus, I've also included my beginner trading workbook guide in the description to help you practice everything. And if you're new here on this channel, make sure to hit that subscribe button and turn on notifications so you never miss an update on the best trading and investing tips, strategies, and market insights. Let's aim for 100 likes on this video so it can reach more people and they can benefit as well. So without wasting much time, let's get into it. First, let's simplify what a trading chart actually represents. Whether you're looking at US stocks, crypto, Forex, or Nigerian stocks, at its core, a trading chart always shows three things. 1. Price. This is simply the current value of an asset. Every movement on the chart represents buyers and sellers fighting for control. 2. Time. Every chart moves across time. You can view price movements on different time frames like 1 minute, 5 minutes, 1 hour, daily, or weekly time frames. This allows traders to see both short-term and long-term trends. And 3. Market psychology. This is the most important part and where it gets interesting. Most people get it wrong because they focus only on price and completely ignore what the market is feeling. Charts are actually a visual representation of human emotions. Every movement you see on a chart is driven by fear, greed, FOMO, or panic selling. Even in the Nigerian market, price moves because of news, earnings, investor sentiment, or institutional buying. So when you learn to read the charts, you are essentially learning to read trader behavior, and you can analyze any market in the world. But here's something interesting. In a moment, I'll show you why Nigerian stocks sometimes behave more predictably than US stocks and how you can take advantage of that. Now, let's talk about the most important building block of trading charts, candlesticks. Candlesticks work the same whether you're trading Apple or Tesla stock, Bitcoin, or Dangote cement stock on the NGX. Each candle tells a story about what happened during a specific time period. A single candle shows 4 key pieces of information: the open price, where the asset started trading; the close price, where the asset finished trading; the high, which is the highest price reached; and the low, which is the lowest price reached. A green candle means buyers are in control, and a red candle means sellers are in control. Now, the key idea beginners must understand is that if the candle closes higher than it opened, it usually appears green or bullish. This means buyers were stronger. If the candle closes lower than it opened, it appears red or bearish. This means the sellers dominated. Sounds simple, right? But here's where it gets powerful. When you combine multiple candles together, you begin to see patterns forming in the market. And these patterns often give traders clues about what might happen next. Now, here's something many Nigerian traders overlook. Not all candles mean the same thing in every market. In fast-moving US stocks, candles can be aggressive and volatile. But in Nigerian stocks, they often move slower or less volatile and cleaner. But the structure is still the same, and that means the same strategy still works. In a few minutes, I'll show you how that actually gives you an advantage most traders don't realize. Once you understand candles, the next step is identifying market trends. Markets generally move in 3 directions. uptrend, downtrend, and sideways. Uptrend is when price keeps making higher highs and higher lows. This tells you buyers are in control. During strong uptrends, traders usually look for buy opportunities. Downtrend is when price is forming lower highs and lower lows. This tells you sellers are dominating the market. Many traders either sell short or stay out of trade. And sideways market is when price moves between support and resistance levels. This is also called consolidation. If you don't understand this part, you are basically trading blind, because trading against the trend is one of the fastest ways to lose money. But here's the interesting part. Nigerian stocks often move slower and form cleaner trends compared to highly volatile markets, which means you would see fewer fake breakouts. And if you learn to spot trends properly, you could actually find more stable opportunities. But wait, there's one mistake traders make when identifying trends, and it completely ruins their entries. I'll show you that in the next section. Now, let's unlock one of the most powerful concepts and chart reading tools in trading: support and resistance. This is where the real money is made. Support is a price level where buyers usually step in and stop price from falling further, and resistance is where sellers tend to enter and prevent price from moving higher. Think of them like floors and ceilings in the market. When price approaches support, traders watch for potential buying opportunities. When price approaches resistance, traders watch for possible selling opportunities. This is where smart traders make their moves. But here's the secret: these levels work extremely well in Nigerian stocks. Why? Because many NGX stocks respect key price levels strongly due to institutional participation, lower volatility, and fewer sudden spikes. So when price approaches these areas, smart traders don't panic. They wait, they observe, and then they react. But this right here is where it gets interesting. What happens when support or resistance breaks? Because this is where beginners get trapped and experienced traders profit. So let's break that down next. Interestingly, when resistance breaks, it often becomes new support, and when support breaks, it can turn into new resistance. This concept alone is used by professional traders worldwide. However, breakouts can also be false or fake breakouts, which often traps inexperienced traders. One major mistake beginners make is relying on only one time frame. Whether you're trading in Nigeria or globally, professional traders use multiple time frames. For example, the daily chart shows the overall trend. When you switch to the 4-hour chart, it helps identify key levels. And then the lower time frame, like the 15-minute or 5-minute chart, is used for refining entries. This technique is called multi-time frame analysis. It helps traders avoid bad entries and find higher probability setups. And this works on Nigerian stocks, US stocks, crypto, and Forex. Same strategy but different markets. But here's the catch: if you use the wrong time frame for entries, even a perfect setup can fail, and most beginners don't even realize they are making this mistake. Now let's bring everything together with some real examples. Here we have Apple stock on the daily time frame, and you can clearly see it's in an uptrend. Price is making higher highs and higher lows. And notice this: fast movements, big candles, strong momentum, right? Now here's where it gets interesting. If you take a closer look, you'll see that whenever price pulls back to a key support level, bullish candles start to form. This is a very important signal. It tells traders that buyers are stepping into the market. And this is exactly where many smart traders begin to look for buy opportunities. Not at the top, not randomly, but at key levels with confirmation. That's the difference. This is how chart reading helps traders make more informed and more strategic decisions. Now let's switch over to the Nigerian market. Take a look at Boa Foods stock on the weekly time frame.
you'll notice something different immediately. The movement is slower, less aggressive, less volatile. But look closely, it's still respecting the trend, support levels, and resistance zones. Now let's take it one step further. Look at Dangote Cement, also on the weekly time frame. Same thing, slower price movement, but still following structure. So even though Nigerian stocks may not move as fast as US stocks, the chart behavior is still the same. And that's the key lesson here. Structure over speed. Because once you understand structure, you can trade any market in the world. This is where smart traders adapt. They don't complain about the market, they adjust to it. And that's exactly what you should focus on. But here's the real question. Where exactly should you enter a trade to increase your chances of winning? Because knowing the trend is one thing, but timing your entry, that's where the real money is made. And if you want to learn how to do that properly,
in my previous video, I broke down how to identify winning NGX stocks before they move and how to find high probability entry points. Make sure you go watch that next.
Now, if you really want to master chart reading across both Nigerian and global markets, then you need practice. That's why I created my beginner trading workbook guide. Inside, you'll find chart reading exercises, support and resistance drills, real trade examples, and trading journals. You can download it using the link in the description and start improving your trading step by step. Because watching videos is one thing, but applying is what makes you profitable. Alright, take this quick quiz to test what you learn. Look at this MTN stock chart. Question 1. Is the market currently in an uptrend, downtrend, or sideways market? You can pause the video and comment your answer below. Question 2. Price is approaching a strong support zone. What should you expect? Drop your answers in the comments. And here is something to think about. The traders who win consistently aren't guessing, they are reading the chart. If you want to take this further, I recommend you watch my next video where I break down how to find the best entry points using support and resistance, because that's where most profits are made. And if you want more trading strategies, chart breakdowns, and stock market insights, make sure to subscribe and turn on notifications. I'll see you in the next video.